standard costing. And I think where we left off yesterday, prompt me if you've got a different memory for this, is we were going to take a look at the labor variances. I think I put all the data and we had to calculate the variances and then have a little conversation about it. But before we do that, let's just back up a second and revisit what we're exactly doing here. Jess? What are we doing here? What's Chapter 10 about? Yeah, we're evaluating, it is performance, but what we're doing is evaluating whether our product is costing us what we think it should cost us to produce, right? Efficiency, pricing, applicability of current standards, right? So this is really, we're talking about a budget for one unit. That's what a standard cost is. If I'm making, what am I making? If I am making stethoscopes, how do I determine what the standard cost is for one stethoscope? Tell me the 6 things I need to understand. Okay, my direct materials cost. That is cost.
Oh,
Quantity. And quantity. My direct materials cost and quantity. Jess? Go ahead. What was the next thing?
direct labor and then manufacturing.
So then direct materials cost and quantity. Direct labors, rate and quantity. Rate's just another word for cost, right? Manufacturing overhead, I have to know what predetermined overhead rate is, and I need to know what it's based on, obviously. And then quantity of whatever it is that it's based on, my activity driver. So when I put those 6 things together, I line them out, and it's like, oh, it should cost me $28.36 to produce one stethoscope, and I know exactly why. Okay? Why can't I just stop there? Well, so the fixed costs are going to come under manufacturing overhead, right? Right? Because direct materials is always variable, direct labor is always variable. Manufacturing overhead has 2 components, doesn't it? Fixed and variable. So I add that all up, $26.38. Why don't I just stop there? That's how much it costs me.
Well, you don't know whether if you have your planned budget and you're over the stuff, if you have what you planned and then you have what you actually have, if there's a huge difference, why do you have that huge difference?
Exactly. That's exactly what I have to do. I have to then look at my actual number. So I do my standard cost. This should sound very familiar by now. Ahead of time, right? I'm estimating into the future. Then I go into the future and it actually happens. Now I'm at the end of it and I'm looking back and saying, is what just happened what I thought should happen? And if not, why not? Right? So in order to do that analysis, these are the same slides. Let's see now what's happening here. These are the same. This is what I did the other day, but I'm not sure what's going on. Okay, so then we talked about the difference between optimal and practical. Which did we decide was probably the best way to set our standards? Under the normal or practical way, obviously. I guess it's underlined here. Okay, variance calculations. What's MBE again? Management by exception. I only look at variances that are outside of acceptable parameters. 2-3%, probably not going to worry about it. My company might decide 10% is fine. Okay, so I only look at things outside the parameters. Okay, direct materials. What's weird about direct materials variances? There's one thing that's weird about them that isn't the same with, that doesn't apply to direct labor or overhead.
They don't use that.
If you take the quantity variance plus the price variance, is it going to equal the total variance? Well, it will in one situation, only if you purchased and used the exact amount. 18,000 grams, 200,000 tons. I don't know. I don't care what it is you're making. If you bought and used the same amount, but that's not usually how we do it. Usually you're going to purchase in some sort of bulk possibly to get a discount. Then you're going to want some extra for your wiggle room with your ending inventory, as we all know. So usually you can't add them up and get to the total. So we went through direct materials, and then I think we left off, let's see. Oh, we're building crates here, right? That's exciting. And this is still materials. Let's see. Okay, here's our labor, and that's where we left off. So I'm paying my folks $9 an hour. It takes about a half hour to build a crate or a pallet each, so about $4.50 a unit. Oftentimes I will give you pieces of the information, and you have to extrapolate the other pieces, like what's $9 times 0.5. Okay, then I actually produced 1,000 crates. So what do we call this again when we get to the we take what we thought was going to happen and apply it at the rate, at the level that actually occurred? That's called our what? Yeah, it's our flexible budget, isn't it? Then you get into the variances. So it's our flexible budget. So I spent $3,928 for labor for 480 hours. So this one we can calculate, and this is where you should start. Calculate the total variance. Okay, I'm $572 under what I thought I was going to spend. That's a good thing, favorable. Do I stop there? No, I want to explain what happened. So our rate variance, we know that we put inside the parentheses whatever the name of the variance is, right? And so I want to know how much of the differential in the rate happened at the actual quantity I produced. And then for efficiency, which for both labor and overhead is our fancy word for quantity, how much labor did I use, my efficiency variance, I want to put my quantity is what goes in the parentheses because that's the name of the variance. And then I want to pull to the outside my standard rate. That should say actually rate instead of price because it's the labor variance. Right, rate, price, same words, just price is for materials, rate is for labor and overhead. Okay, so let's start to plug in the numbers. What was my actual quantity that I used? No, of hours.
480.
And what was my actual rate? And how did you get my actual rate? Oh, you sound horrible, Jess. Oh. So I take 3928 divided by 480, right? Did everyone get 818? 8.18? So, and again, a lot of times before you can even jump into the variances, you're going to have to kind of extrapolate this stuff. So how much per hour did I pay? Is that right? Is that what everyone got? Go ahead.
So I was looking at the book, and they use actual hours, and you were using actual quantity, and that kind of.
So you're telling me they write AH?
Right.
Okay. Same thing. They're using actual hours. I don't care what you put in there. I mean, the quantity makes sense to me just because that stays the same through all of them. But if you want to put AH, then that would be AH minus SH. I don't know, it feels to me like once we get in more and more abbreviations, that has the potential to be more confusing. What do you think?
Because it's not always going to be hours.
For labor, it is because labor is based on hours, but for manufacturing overhead may or may not. So, I don't know. You can do whatever you want. I think I might just keep it. What do you want to do? Do you want to make it congruent with the book, or do you want to keep it the same for all of our calcs?
How are you going to have it on the test? Let's do it that way.
I'm not going to have anything on the test. You're just going to have to calculate the variances. I mean, this doesn't mean anything from a testing standpoint. You need to be able to calculate it and tell me what it means.
It might help to make it congruent with the book, I think.
Okay.
Refer to the book.
All right.
Do you think, you guys? I mean,
What do you think? Do you want to keep it the Q or do you want it to match the book?
Well, to me, quantity means something different than hours.
Okay. All right. So
Yeah.
let's do that.
so
Let's
if
do
we
that
refer to
because
the book, it-
you're saying that confused you when you went to look at it.
Me too. It did.
Okay. So I'm sorry. So then this is what am I going to put in here then for efficiency?
480.
Right, but I mean for my abbreviations, actual hours minus standard hours, right? Yep? Okay. Sorry. So what is my actual rate then again that I was paying? No, my actual.
Oh,
And how much should I have been paying? 9. So I'm underpaying by 82 cents an hour times 480 hours. Okay, let's round up and what's the number? 394. Okay, so I'm just going to put this up here. Favorable or unfavorable? Why? Yeah, I'm paying less than I should have, or than I planned on. Okay, now let's go over here. Standard rate again. $9. Actual hours I used? 480. How many hours did I think I was going to use? 500. So 20 hours less than I planned at $9 an hour, 180. Favorable or unfavorable? I used less hours than I planned on. So now, if the stars align, 394 and 180 should both going the same way, should come to 572. We have a $2 rounding error, that's fine. So if you're off by, less than 1%, that's rounding. We're not going to go to pennies. What does this tell me? What does this picture tell me?
that you're looking more in the time.
Right? I'm more efficient and I'm what does the 394 show? My people are more efficient than I thought and I'm paying them less. What does that say?
You need to pay them more.
You're cheap. I guess my question would be, why are you paying people $8.18 an hour if you budgeted for $9 an
They're
hour?
working less time, they're getting the job done quicker, maybe, no?
No, that's this.
Okay.
Okay, so Jeannie said, well, they're getting the job done quicker. Yeah, that's what this 180 shows, because I used 480 hours rather than 500, right? My question, though, is what does this rate show? Why am I paying them $8.18 when I could pay $9? What might that be indicative of?
Well, you're probably getting the 9 from an average, because not everybody is.
Okay, maybe that's an average, and not everybody's at $9 an hour. Maybe some people are at 8, some people are at 10. Overtime would go the other way. That would make an unfavorable variance. Oh, I see. So Gretchen's hypothesizing that that maybe my $9 an hour included some overtime from prior periods, and I wasn't paying that. Yeah, that might well be it. Okay, so you need to take a look at it, and maybe overtime's become a thing of the past. I don't need that anymore. I'm going to bring down my standard costing, aren't I? Okay. What's the last? And so obviously, always in this scenario with the labor and the overhead, what do? You make sure that these tally to that, right? You cannot make that check with the materials variance unless what? Sherry? You can't, your two variances for materials are not going to tally to the total unless what? unless you purchased and used the same quantity. In the example, what was I making before? Backpacks. I think I went and got, whatever, 23,000 pounds of something, and I used 19,000 in production. So the two variances each tell you something about your efficiency and your cost, but you can't add them together to get to the total materials variance. So your first thing when you look at one of these is, for materials, is to underline and understand, did I purchase and use the same amount? If you did, cool. Then you get to do that double check on your work, don't you? If you didn't, you're just hoping that they're right. Okay, and then the last thing let me say is when students test on this, I will get the most bizarre answers. They're so unreasonable. My variance was 0.0008. What does that mean? 8/10,000th of a cent is your variance? How does that make sense? Or 8 million? No, I don't think that's probably reasonable, and the numbers are here. So when you get a variance, it's got to make sense in relationship to the numbers you're talking about. 572 divided by 4,500 is a little over 10%. That's significant, but it's not, 10,000%, and it's not 0.0001%. It makes sense, doesn't it? So please look for that. Look for reasonableness. I will tell you, when I go out into the community or talk to my advisory committee, that's the number one complaint they have about students coming into the workplace, that they give them hand in work that isn't reasonable. You've got to check for, does this make sense? Okay, I had a couple of you give me tax returns last week where people that were making 50 grand were getting back $100,000 in tax. Wow. That's crazy. It's like, boy, that's not going to send up red flags. So you've got to look, I'm kind of teasing you, but kind of serious. You really have to look for reasonableness. Does this make sense? Always do that scan. Okay, so now let's take a look at our variable overhead variance. So this is our last set of variances. Now, so again, direct materials, direct labor, and then we have two kinds of overhead. What are they again? Fixed and variable. Fixed manufacturing overhead is, we're not going to do it. It's above our scope. You have to do a three-way analysis on it, and it's beyond our scope. So all we're doing is variable manufacturing overhead variance. And let me give you the data. My predetermined overhead rate is, my activity driver is what? Direct labor hours. Do you know how many hours you're supposed to be working to produce these? You do. I gave that to you up here. Yeah. So you've got the data. Did everybody write down all that data in their notes? My actual overhead, variable overhead, was $980. And the formulas look exactly like direct labor. Don't they? So when you get to book, is it AH and SH for the variable overhead? First off, let's do our total variable manufacturing overhead variance. The total variance is always the difference between the what? The actual and the what, Jess?
The actual and the plan.
The actual and the standard, yep. Total actual minus total standard. And then we're going to break it down into the two, just like we did with labor. So what was my total? Variable overhead. What was it?
Are we basing it off of our plan?
You base everything off of what should you have done at the level you actually produced. Actually, you should probably all write that down. What should I have done at the level I actually produced? What was my actual manufacturing overhead? $980, right? Right here? Yeah. How much should I have spent? Don't say it out loud, but I want you to each calculate it. How much should I have spent on variable manufacturing overhead for my 1,000 crates? So take a second, calculate that. And then that number minus the actual, or the actual minus the standard, is your variance. So we're doing just the same as we did with labor. And we're going to break it into our two formulas. How many crates did I make? 1,000. What's my rate per hour? No, for overhead, manufacturing overhead. $2. And how many hours am I assigning to each crate? That's it. So my standard variable manufacturing overhead was $1,000. And boy, that looks like it makes sense because it's real close to 980. The question here, or not the question, but the prompt here, you can't just put the rate, can you? What if it took 5 hours to make each of them? You're going to be applying manufacturing overhead at a rate of $2 an hour, but how many hours? Well, in this case, 0.5, but you always have to think about that. You can't just take 1,000 crates times $2, because we know when you apply a predetermined overhead rate, you apply it based on whatever the driver is, right? So my variable manufacturing overhead variance is $20. Favorable or unfavorable? Favorable. I spent less than I should have. This is one of those little ones, or is one of the two, that we know every time we can explain the two variances. Or we can explain the total variance by calculating two of them. A spending variance and an efficiency variance. Spending, is that talking about quantity or rate? It's talking about rate. So what goes inside the parentheses? Mm-hmm. Whatever the title of the variance is goes in the parens, right? So always set that up first. Actual rate minus standard rate. And what goes on the outside then? Actual quantity. And do they call those actual hours? Huh? AH? Okay, so the hours is the quantity. How many actual hours? Okay, efficiency variance. Does that refer to rate or quantity? Quantity. So what goes inside the parentheses? Right, so AQ minus SQ, but we're calling that hours here, right? So actual hours minus standard hours. And then what goes on the outside of the parentheses? Standard rate. Okay, let's fill them in. How many actual hours did I work? How many? Oh, 480. Yeah, 480. Yeah. Okay, you're probably going to need a second to figure out my actual rate. And you can take these out to, I don't know, 2 or 3 decimal places. Then plug that in and subtract the standard rate. Anybody get the actual rate yet? 2.04. Okay. And how did you get that?
I took the 980
Yep.
divided by the hours.
Yep. 980 was how much I actually spent divided by the hours I worked, which was 480. Right? So 980 divided by 480, 2.04 is what my actual rate was. So you should be able now to figure out what my spending variance was. If you finish the spending variance, go ahead and run the efficiency variance. $2.04, $2, 4 cents times 480 is about 20 bucks.
19.
19?
Is what it says, yeah.
Okay, thanks. So is that a favorable or an unfavorable variance? Unfavorable because it looks like I spent about 4 cents an hour more than I planned on. My standard rate here, $2. How many hours did I actually apply based on? 480. And how many hours had I planned on applied based on? 500. So that's about what? 40 bucks. Favorable or unfavorable? I'm sorry? Favorable. Because I applied, I had less hours, right? So that's a good thing. And this is a great example because if you net a favorable and an unfavorable, does it end up to this? Right? Again, I'm a buck off rounding, whatever. Okay. So they have to tally to this, don't they? Now, what in the heck does this all mean? Spending variance. Again, these numbers are immaterial, so if you were using MBE, you wouldn't even be looking at these, but I want to use them just because we're trying to understand what they mean. What does a spending variance tell you?
You spend more than that.
Something's costing more than I planned, right? Some element of variable overhead. Give me an example, 3 examples of things that may be encompassed in my variable manufacturing overhead rate.
Maybe your electricity went up.
My electricity. What else?
You bought materials.
What kind of materials? Huh?
You bought.
There's 2 kinds of materials. We've already looked at direct. Indirect materials. My question is, what's an element of variable overhead? Indirect materials. What else? Indirect labor, like what?
Supervisor.
Supervisor, maintenance, security, right? A lot of things are encompassed in variable manufacturing overhead. 4 cents, again, are you going to even look at it? That's 0.2%. But if it was 40 cents, then you would be looking at it, wouldn't you? Okay. And the efficiency variance, I can just tell you this. This is always, always, always going to go the same direction as your labor variance if that's your activity base. Does that make sense? That's always going to go the same direction as your labor variance if that's your activity base. Okay, we're going to spend the rest of today and most of Friday working through this example together. So I'm going to turn on the lights, or I guess Jess is. I'm going to turn off the recording, and we're going to spend some time getting familiar with this. So you're going to want to take a highlighter or a red pen. I'm going to give you 5 minutes, and I want you to go through and take a peek at what you think is relevant here.